Good morning. Welcome to the show. There's a lot of stuff to talk about today, ranging from Michael Burry to Warren Buffett. It's going to be a lot of stuff. Let's go. Beaker, I absolutely love your comment. That was great. All right, so market is red today, but like I said this morning when we were chatting in the Bid and Ask Nation, the market was red yesterday, and all of a sudden 1 o'clock, 2 o'clock rolls around, and the market is as green as can be. So that's that. Okay, let's just start with some stories. Where do I want to start? Let's start with Warren Buffett and the great rebalance. So his 13F filing came out for the second quarter, and there were some changes to his portfolio, namely getting rid of a lot of biotech stocks, and not only getting rid of, but reducing a lot of biotech positions. So let's start with what he added to first. He added to Kroger, and he added to Restoration Hardware. He trimmed positions on Merck and AbbVie. AbbVie is actually one of the employed trader stocks, so that happened, and he completely exited his position on Biogen, which is not surprising, and I don't blame him one bit. With everything that's going on with Biogen, it seems like everything's hinging on that one drug, so that's that. He trimmed his stake in GM, he trimmed his stake in Bristol Myers, he trimmed his stake in Chevron, and that was after opening a Q4 position. And he mostly sold off all of his Wells Fargo. So if you hadn't seen the news, there you go. You got it, what Warren Buffett did in the last quarter. Okay, next, the jobs. Where's the jobs? Didn't I have that? Fill jobs. Here we go. Fill jobs from my buddy Miles. So companies pull out all the stops to fill in the market like we have never seen before. So no matter what source you go to, fundamentally, there are 40% more jobs available today than there were pre-pandemic. As of the July jobs report, there were 5.7 million fewer. Hold on a second. I need to just mute this. There were 5.7 million fewer people employed than pre-pandemic at the peak of 2020. Nationwide, so what could help? What I've been saying for a long time, I think we're going to start seeing it in maybe September, maybe October is when we're going to see it. Nationwide expiration of the unemployment benefits in September could be a catalyst to bringing folks back to the workforce, returning to schools, and and alleviating the child care absence from the labor market. So large employers are offering massive incentives for people to go back to work. So all of this coupled together might have to do with something where we're going to see an explosion in the jobs number in, say, October, for example, once September gets out of the way. And employers are dropping their requirements left and right. So if you go down here, just to give you some perspective on what net employees are casting right now, the number of jobs that either require a college degree or 5+ years of experience have fallen in half. The number of jobs that say no experience required, stated in the job description, has doubled. Employers are raising wages. They're offering signing bonuses, flexible schedules. So they're doing whatever they can to get people back to work. And I think, obviously, it's eventually gonna work out. So my sister works at Walmart. The incentives are insane. Please tell me what those incentives are. I haven't actually read into them. School is disruptive. School is very disruptive. Disruptive to my time when I was a child. All right. We talked about this yesterday. Guys, smash the like button for me. We talked about this yesterday. The Fed officials are nearing an agreement to begin the taper in, they say, November. So they are moving forward on a timetable that is to begin scaling back its quantitative easing policies in about 3 months if the economic recovery continues. I guess they're going to be the ones that deem the economic recovery is continuing or not continuing. So the Fed is to announce at a meeting on September 21st and 22nd its intention to start tapering. So there's a lot of people out there that are saying that it's going to be in 2023. Some are saying mid-2022. It's going to be interesting to see. I'm also interested to see what they're going to do with the interest rates. That's the one I'm very curious to see. I can't wait to see what they're going to do with the interest rates. But I am expecting this taper tantrum, as they call it. Okay, let's do Walmart next. So Walmart did very well. I think their stock price is pulling back right now. They did a revenue of $141 billion, which came in higher than the analyst expectation. Then that was driven by store and traffic, and stimulus check spending bolstered the footprint. So they have a lot more traffic in their stores. And their e-commerce fell 6%, which I was quite surprised about because they have a phenomenal, I love Walmart.com. It's a great website. They have 2-day shipping just like everybody else. Well, just like one other person, one other business. But maybe Target has it. I don't really know. Online sales grew at a slower pace during the second quarter as compared to the first quarter. Their health and wellness jumped mid-double digits with vision centers open, vaccines, and brand drug inflation. I'll tell you what, their vision center, I go to the Walmart Vision Center, the one at the Walmart Vision Center in around where I live, the doctor there, well, the optometrist, he is the Cleveland Guardians team eye doctor, and he heads down to Goodyear, Arizona every year and checks out all the players' eyes. So Walmart Vision Center is no joke. The Home Depot, same store sales were the issue here. So same store sales fell for the first time in 7 quarters. But net sales rose 8.1% to $41.12 billion, beating the expectation of just a little under $41 billion. So those businesses are railing on, and here we go. Okay, now the story that everybody cares about. Michael Burry and Cathie Wood. So Michael Burry, he has taken a very large short position in the form of puts on ARC Innovation. And he has a very large short position in the form of puts on Tesla. So he's kind of doubling down on the Tesla one because that's ARC Innovation's biggest holding. So Michael Burry's Scion Asset Management owned a bearish position of contracts of 235,500 shares of ARC Innovation at the end of the second quarter. The new position was valued at almost $31 million. Wood and ARC have struggled to maintain momentum amid concerns of lofty prices and accelerating inflation, but Cathie Wood's in it for the long term, so it really doesn't matter about what's happening in the short term, remember? Michael Burry has indirectly bet against Wood for some time with his very big position on Tesla, which is their largest holding, having almost 1.1 million shares sold in put formation on Tesla. So that is that. And then Cathie Wood came out today and said, to his credit, Michael Burry made a great call based on fundamentals and recognized the calamity brewing in the housing and mortgage market. I do not believe he understands the fundamentals that are creating explosive growth and investment opportunities in the innovation space. So Michael Burry, I've said it a million times, he is not often wrong. He's just very early on something. So early, not wrong. That somebody told me, my friend Nick told me that once on a pharmaceutical company that I bet on. It took about 2 years for me to be correct on it, but he always said you were early, but not wrong. And that's how I look at Michael Burry. Obviously, it's a way bigger bet, and he's done it on much more complex things, but early, not wrong. Let's see here. Let's see what the market's doing real quick. That's all the news I have. There wasn't too much. Okay, so market's down a little bit. Who just said that? Still, yeah. I still don't think that anything that's happening overseas, I think the narrative is going to be gone pretty soon. And I think you saw the plunger team come in yesterday and throw all these markets back to positive. I think you're going to see it again. Why is it? There's nothing that's changed right now. I told you, I don't think anything's going to happen in this market, positive or negative. If we close down 144 points today, I very much think we're going to be closed up 144 points tomorrow. I just don't think that anything's going to happen until this Fed meeting is over, until Labor Day is over. And all of this is just reaction to the news of the day. So let's see. What are the yields doing? The yields are 10 years ticking down. The 30 years still pretty stable. I was reading a lot about the 30-year. 3-month is stable. Let's see what earnings are. Obviously, Walmart and Home Depot. Let's see tomorrow. Tomorrow you have NVIDIA after the bell. That'll be a big one. Cisco, Target, Lowe's. Lowe's will be interesting because I would be interested to see their same store sales. Macy's reports Thursday. Kohl's, I don't even know Kohl's was still in business. I think Kohl's is in business to do Amazon returns. John Deere and Foot Locker is on Friday. And then that's pretty much it for earnings season. So then we'll wait 12 more weeks and do it all again. All right. If you want to join the us, Everything Money, Discord access, $7 a month. If you want to get our software, it's $26 a month. And what's today's date? The 17th? Okay, you're good. $26 a month. If you want to join the Bid and Ask Nation, that's with me. That's trading exclusive channels, $76 per month. And with this, obviously, you get all the software that we have for free. If you want to do a one-on-one session with me, $750, 1 hour, Zoom call, talk about trading, long-term, short-term, day trading, whatever you want to do. I have 3 scheduled for this week and 1 scheduled for the following week. So it's a lot going on there. And if you want to do a real estate deal and consult with Paul, $10,000 gets you that. And if you're doing a big deal, I think it is very much in your favor to do so. So we got some extra time today. So give me a few. Oh, by the way, follow me on Instagram at TraderMo_EM, at TraderMo_EM, and follow Paul at Paul Gabriel, PaulGabriel. And that's that. So give me some stocks. I'll run through them. Remember, we have the show today at 2 o'clock in the afternoon, and we will, there's going to be a donation. I think today is Tim's select. No, I don't think. Maybe it's Seth's. I'm not sure. Somebody's choosing the charity today. So if you donate money right now, I'll definitely do your stock if you donate. I'm just going to get inundated in a couple seconds in comments. And you'll find out what the charity is at 2 p.m. So, all right, give me some stocks. Who is Paul? Yeah, good question. U.S. index, please. All right, just because you said that, I don't know what the U.S. index is. Oh, U.S. dollar. All right, you got it. UUP. Let's see what the dollar's doing. What's the dollar doing? The dollar's soaring. not. Zoom out and check it out. So, all right. The dollar right now is just jumping around in there. Depending on what you want to say, I guess you could say it's just teetering on this trend up. But the dollar is very sporadic. It's just bouncing all over the place. So it's holding at its 25-day moving average. Actually, it bumped right above it. But yeah, the dollar, I don't know what to tell it. Oh my God. How many people are saying Baba? Guys, relax. It's going to be okay. It's going to be okay. But we'll look at Baba just to ease your troubles. All right. So Baba's going to open at about $177, is it? Let's see. I'm sure it's top trending ticker today, $176.85. So for sure a downtrend. And it's just dipping a little bit more. Daily trend is down. Pretty good selling volume coming in on it. So I would probably think that this thing would get down to maybe $170 a share. And let's zoom out a little bit more. Let's see if we can just get this here. Yeah, I mean, maybe it could go to 150 or something like that. But hey, they're in a tough spot right now. They're getting hit with everything going on, and yeah, I don't know. All right, did I calm everybody down on Baba? I hope that I did. All right, BRB. Oh, okay, all right. Let's just get the Baidu out of the way because everybody's probably panicking about that too. $141 a share. I mean, they're virtually the same chart. If you take a picture of this one and take a picture of the other, you're way under moving averages. You have good selling volume coming in. You're at the bottom of your stochastic on both charts. And you have the same kind of thing. You got a support level coming in right here, right above $100, and then you're just below $100. And then if you free fall from there, the company's probably going to go under. And I'm just kidding. It's not. There's just not a lot of support down here. So eventually these things will turn around, guys. I mean, remember, there was some little clip that I watched. It was actually from I can't remember the name of the firm. But anyways, think about what Jeff Bezos said. He said company and stock are not the same, and that's exactly what this is. If you go and look at the company of Alibaba or this, if their numbers are correct, everything is, I mean, the companies are doing very well. So, all right. So look at this chart and then look at this chart. Just remember this in your head. Boom. They're the same. They're virtually the same looking stock. This one's just a little bit more consolidated. So JP Morgan, you got it, saying JP Morgan. So the banks are interesting in times like this. Let's zoom in a little bit. The nice thing about JP Morgan is you're holding right over your 100-day moving average. So that is good. And look at how consistent that volume is. That's wonderful. Now, day to day, you're trending down, but overall right now you're trending up with a very hard snapback. So a snapback is you've run up and you've just pulled back in price with your trend being positive still. So get this thing, for me, saying you got to make new highs. You get some momentum going this way and then take out this previous high and get an engulfing candlestick. I don't see a good situation trying to add somewhere in here because this is a very, very strong resistance point that has been created. So just be careful with that one. But the volume is great. I love the volume. Smash the like button for me, please. Microsoft, you got it. Oh, man, Microsoft's facing all-time highs. Now, the issue, well, it's not really an issue. The thing to pay attention to is you got this long wick from yesterday on Microsoft. Now, this could be a hammer formation. It could not be. It's pretty hammer-looking, and a hammer is a thing that looks like that. So that does look like a hammer versus having a candlestick that is completely filled out like that. So this could indicate a change in direction, but I probably wouldn't bet on it. Just if you see this right now, please take maybe take some profits off the table, and you will. I think you'll be happy with that. Okay, DocuSign short. Yeah, this thing's looking really good. DocuSign is. I would just add on an engulfing candlestick, but don't add 100% of a position. Add maybe 30 to 50% of a position. Yeah, yeah, don't maybe add 30 to 50% of a position if you get an engulfing candlestick, but make sure you're taking out that 50-day moving average. But everything's looking good. I would just like to get this yellow line a little bit more. I would really like to have 3 days in the sweet spot before giving a full position. So maybe if you get this today and you get this tomorrow, you can go 100% on it, and you'll be able to short this thing down to the 100-day moving average without issue. Good question. Good stock. Zillow. All right, let's see here. Zillow. Now, is Zillow disruptive or not? Doesn't look very disruptive. All right, so Zillow is really just, this is one of those ones where you get to the bottom and it's a dog stock and it just coasts and just goes down for a very long period of time. So it's still in that same area. Let this thing you need to get some momentum going to the top side. And even shorting it now, I mean, you can. Just make sure you're playing tight stops. The good news is if you drop below 93.50, you could probably short this thing, but make sure you're playing with tight stops in there. That thing is not going to fall too hard unless there's some news coming out of there. All right, let's see here. Give me another stock. Dun, dun, dun. Why aren't Zillow and Rocket killing it right now? Well, I think it comes down to a demand issue at this point. There's a lot of, home prices are getting to the point where they're really pricing people out. Okay, here's a nice gap. This is Pinterest. Cash, Nick, Noah, Caesar, if anybody's in here, I think Caesar's busy this week, but if anybody's in here, let's really keep a watch on this one for our idea and experiment that we're running, because this thing is that is a nice looking gap and it's just starting to do this teeter. So let's pay attention to that. I do expect some volume to come into this thing. If we can just get this daily stochastic running up, this weekly will follow. So let's keep a watch on that. This is my gap stocks idea. All right. Okay, Viacom. Guys, smash the like button for me. My cup today is Kenny Chesney's No Shoes Nation. It's a nice cup. All right, Viacom. Oh my God in heaven. Oh, that's right. Archegos, I forgot. Okay. Yeah, so with Viacom, they're back down. Weren't they? They spiked up a little bit here in the last couple of days because of some news. I can't remember what the news was. They signed some $2 billion contract with somebody, and that has since been erased. So their downtrend continues. To me, I look at Viacom. I know it's a value play that I have a lot of puts sold on. Well, I shouldn't say a lot. I probably should put more puts on there. Yeah. Just to go short on this thing, it's tough because you're holding a very big support level in here. I mean, you could just see it's basically holding this level that it was back in and over here. What was this? Was this pre-pandemic here? This was January. This was the pandemic. So this is holding pre-pandemic levels and it's just consolidating right there. So again, company and stock are not the same. Keep a watch on this thing and go from there. Bill Wang is the GOAT. He was, that's for sure, in some capacity. All right. CROX. I love me some Crocs. Man, look at this thing go. All right. So same deal as this with Microsoft. You're kind of getting that same looking candle. You can take some profits if you feel the urgency to, but you really can just keep adding to this thing on a long-term chart. Look, I think this is a power stock. Yeah, this is a power stock. So a power stock, for those of you who don't know, is a stock that's over all four major moving averages, making new all-time highs, and that's exactly what they're doing. They touched an all-time intraday high yesterday. So if you get an engulfing candlestick today, keep adding, baby. This thing is looking really good. Yeah, really, really good. All right. What else do we have? Ford. Oh, why in the F is Intel buying coin shares? I know that Intel bought I think, don't quote me, it's like $770 million worth of Coinbase. Maybe it was 73 million. I can't remember, but I think it was 770 million. Anyways, let's see what's going on here with Ford. Ford is downtrend. To me, I think the short's kind of over. I think it's gonna kind of hold that 100-day moving average, and eventually this thing will get turned up. I actually like if any of my ambassadors are here, I'll just write it down. I'm gonna put Ford on the watch list to go long. Yeah, that's a good looking one, guys. A, smash the like button, please. B, follow me on Instagram at TraderMo_EM, and follow Paul on Instagram at Paul Gabriel. Check the comments for his spelling. It's just Paul Gabriel, one word. All right. Micron. Intel did what? Yeah, look at Intel. Intel's hype dorks. I love that. Let's see Micron. So Micron has done a sweet spot reversal, which is no surprise. They had this big run up and then they just got pulled right back down. So there we go. Sweet spot reversal to the downside. I don't really... Let's zoom out just a touch. So the reason I zoom out like this is I want to see where the support levels are. And this is so I'm just looking at the chart. This conglomeration, that's kind of the support level. So I'm just going to blindly draw a line there. And there you go. You're sitting right at the same support level. So that to me is support. I don't foresee this thing falling below this level, very much below this level. And if it does, it's going to here, which is $60 a share. So maybe keep it on your watch list to go short. And if not, just stay patient with it and go find something else. All right. Skills, SKLZ. What is Skills? Skills Inc. Oh, this is a newer company, right? Yeah, they don't even have a 200-day moving average. So they're for sure in a downtrend. They've broken this support line. Now, here's the thing. The reason that I like trading on, I always say I like 1 year of charts, is because yes, we've broken this support level, but we've broken the support level and I can't see anything else over here. There's nothing there. So we're probably 150 days old based on, I'm just looking at this turquoise line. That's my 100-day moving average, maybe 150 days old. So if I had 365 days or whatever, 255 or whatever the market, how many market days there are per year, I would be able to see maybe there's another support line in here. So maybe this support, I don't know. That's the issue I have with trading stocks that are less than a year old. McDonald's. Oh, McDonald's is looking good. Nick, please throw this on the watch list. I'm making you do a lot of work this morning. This is looking good. I love, so it's falling and we're getting a snapback right now, but this is a big enough snapback to change the trend. This, coupled with what I said yesterday about the increasing the food stamps, this is one of the stocks that I had on the list. I think this was at the top of my list. These are companies that I want to watch that we can capitalize on maybe swing trades or long-term trades to get an influx of volume into those companies. So CVS, Simon, you got it. All right. Okay, CVS. CVS was looking really good last week. Actually, had a pretty nice day yesterday. Very good run going for it. And I do think that this thing can probably go to this $90 area. It just needs a engulfing candlestick. We need the price to break out like this. That's what we need. We just need price to break out. That's the issue. So let's get a price breakout and we will go from there. Iron Mountain. Is Iron Mountain that outdoor clothing store with the wrench, with the nut? All right. Iron Mountain's made a pretty impressive run. And it's at a resistance point. So it's not surprising that it's having this snapback right here with this downturn coupled with falling volume. Yeah, you have to be very patient with this. And these stochastics are getting pretty close to each other. So with that, getting close to each other, I think that you need to be taking some profits and going from there. Okay. ATVI. Apple, please. Sir, I'm not going to do Apple. I am going to do We're doing that in the employed trader series. Okay. Activision Blizzard. I love where the trend is going as far as a watch list stock. Get some progress going here. If we can get over $86 a share, I think you have a buy point on this thing from a long-term perspective. Right now, on the short-term perspective, if you get an engulfing candlestick today going up, get on this thing and go up to the 25-day moving average and take your profits at that. So you can definitely get a swing trade on this right now. Just please be careful. Be aware of that bid and ask difference up there, which is 41 cents right now, but I do not think that it's going to be anything soon. IRM is data centers. Oh, what's that company that has, I thought they were iron something. They have the little logo right here with the nut on it. Somebody put one in here that I wanted to look at. Shoot. Damn. Okay, I can't remember. Jazz. Okay, I'll look at Jazz, but I only want to look at excuse me, Jazz from a trading perspective. I do not think this is a value play. And I just want to tell you guys that right now, and just because I said it on a live stream a couple of weeks ago on a 2 p.m. live stream. So I want to tell you guys, I told you I was going to look into it, and I do not think that it is a value play based on pipeline. Okay, so downtrend, big downtrend, but as you can see, that line I just drew, that's a big support line. So once we get through, if you can break through support and you start making engulfing candlesticks down, have at it. I think it would be a good looking short. I do not see anything to go long on right now with Jazz. CCL, let's do CCL. Dun, 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 dun. CCL. Okay, CCL is trying to move into that uptrend, but CCL, the problem with it is it's always fighting moving averages and always fighting news of Delta variant and vaccine and governors and going out of this port and that port. So there's just very a news-driven place. I think over time, this is a value play for me. Over time, I think they will do very well. It's just right now in the day-to-day, while we're still kind of in all of this, it's tough for them. But right now, even though they're moving into the sweet spot, look how close that stochastic is. The guy's market just opened up right now. So you really need to break out. I don't think I would buy this thing from a trading perspective over $24 a share. Mountain Hardware. Thank you, Eric. That is what I was talking about. All right, I will do one more stock, and then I'm going to get out of here. Tom Poe, today's Bitcoin prediction has not changed. $521 million per coin. That's sarcasm, but that's my prediction. Give me one more stock. Okay, if you can answer for me. No, that's for Paul. Plug. Okay, let's do Plug Power. Why not? They have good charging stations. All right, so they too are sitting at a support level. So if you just draw a line right here, they're just sitting at support, with the exception of that little dip that happened in April, May, whatever that date was. So, but tough thing about them is that they're sitting below all of this moving averages, and they need volume. You see, the last time they made a good run, they had phenomenal volume, and they haven't had it since. Even for them to make this little blip of a run, they needed a lot of volume. Even this little blip of a run, they needed good volume. So you're going to need volume like this to make some kind of run on Plug Power. Unfortunately, it's not going to... I don't think you're going to get it anytime soon, unless there's some crazy news that comes out of this company. It's just one of those hype dork stocks, and you got to let things play out with them. I know they make good charging stations. They have them at Whole Foods and stuff, but they need to get something going where they can get some volume coming into the stock, getting some positive sentiment moving into this thing, and moving forward. So, all right, guys, that's it. I will see you at 2 p.m. on the live show with me, Paul, and Seth. And I will talk to you in the Bid and Ask Nation. We got a lot of recording today. We have some good videos that are going to be coming out this week and next. And that's it. Follow me on Instagram at TraderMo_EM. Follow Paul at Paul Gabriel, PaulGabriel. And I will talk to you guys tomorrow. Have a great day. Bye-bye.